Hello friends, greetings of the day. Welcome to the online session of Business Economics. Chapter number 3, Theory of Production and Cost. And in this chapter, we are learning unit number 2, that is Theory of Cost. Now, we were learning different types of costs, and in that, our next types of cost is historical cost and replacement cost. Let us understand what do we mean by historical cost and replacement cost. See, you can see here that historical cost refers to the cost incurred in the past on the acquisition of a productive asset such as machinery, building, etc. Simply stated, that historical cost is the cost that was incurred in the past for acquiring certain machine or a building or a land or any such kind of property. Whatever is acquired in the past and the cost for that is considered as historical cost. And on the other hand, replacement cost. Replacement cost is the money expenditure that has to be incurred for replacing an old asset. Say for example, here we had acquired a computer before 10 years. So at present, the cost of computer is considered as an historical cost. But when the computer becomes outdated and it has to be replaced, at the time of replacement of that particular computer, the cost that will be incurred, that will be considered as a replacement cost. Let us take the example again. Say for example, this is a computer and it was purchased in the year 2010. So the cost of that computer was 20,000 when it was purchased. If we talk about this computer at today, 20,000 cost of this computer is historical cost on this particular day because it was incurred in the past for acquiring this computer. So the cost that was incurred in the past for acquisition of any asset, any machinery or any property, that is considered as a historical cost at present. Now this computer has to be replaced. It has become outdated in the year 2020. Now we want to replace it. Another same kind of computer is to be purchased, and now at the time of replacement, say for example in the year 2020, this computer, so replacement cost is 25,000. Now this computer is available at 25,000. So 25,000 will be considered as a replacement cost for this particular computer. So the cost that was incurred in the year 2010 is historical cost now, but in order to replace this particular computer, whatever cost is to be incurred, that is considered as a replacement cost now. Friends, you can see here that historical cost is 20,000, but in order to replace the same computer, we have to incur the cost of 25,000. So replacement cost is higher than the historical cost. Why does this happen? See, here it is written that it is clearly mentioned that instability in the prices makes these two costs differ. Prices will always go on changing. In the year 2010, the computer's price was rupees 10,000, 20,000. But in the year 2020, the same computer is available at 25,000. So the price differs, and because of this difference in the price, replacement cost is higher than the historical cost. But do remember that it is not always that the historical cost and replacement cost will always be different. There is a chance that both of them may be equal. There is a chance that replacement cost may be lesser than the historical cost. So All the three situations may be possible. Another classification of cost is incremental cost and sunk cost. Incremental. Now the word itself suggests that incremental means increase in the cost because of any decision taken by the business. When there is additional cost, when cost increases because of any business decision, that will be considered as an incremental cost. Whereas sunk cost refers to those costs which are already incurred once and for all, and now it cannot be recovered. Let us understand by the example. So for example, a company has this machine, and this machine is having the production capacity of 500 units per day. That was purchased in the year 2010. Now the company wants to double the production. In order to double the production, company has purchased another same kind of machine. So the business has taken the decision to double the production, and as a result of this decision, company had to purchase another machine. So another machine has increased the cost, and the cost that has been increased due to this business decision, because the company has taken the decision to double the production, company had to purchase this machine, and as a result of this decision the cost has been increased. This is considered as incremental cost. So in short, we can say that the incremental cost is the cost due to business decision. If the business takes the decision of increasing a certain facility or bringing certain new facilities, the cost increases, and this increase in the cost is known as incremental cost. Whereas on the other hand, let us take the example of sunk cost. So for example, company had purchased a machine, and it was purchased in the year 2010 with the price of 20 lakh rupees, and this was specifically purchased for managing project XYZ. Now after 10 years the project XYZ is completed, and the machine that was purchased here is of no use, and because this is of no use, the cost of machine which cannot be recovered, now that cost will be considered as sunk cost. Sunk cost is the cost which cannot be recovered. So it was incurred in the year 2010, but now the recovery of this 20 lakh rupees is not possible. So whatever amount is not recoverable, that will be considered as sunk cost. Another thing, incremental cost will have to be incurred by the firm when it makes a decision to change its production line, replace a worn out machinery, buy a new production facility, or acquire a new set of clients. So once again, do note that this incremental cost has to be incurred only if the business takes the decision of changing the production or replacement of the worn out machinery or buy a new production facilities. If business does not take any such kind of decision, the incremental cost will not be incurred. It means that this cost incurs only if business takes the decision of bringing certain new facilities. In case of sunk cost, expense increased on advertising, research and development. R&D stands for research and development, advertisement and specialized equipments, fixed facilities such as railway lines. All these kind of expenditures were incurred in the past, and the amount which is now not recoverable, that amount will be considered as sunk cost for now. So these two types of costs are there, incremental cost and sunk cost. This is what we have understood here, sunk cost and incremental cost. Next set of cost is private cost and social cost. Now private cost is simply the total of explicit and implicit cost, or we can say that the cost for production of any particular product, they normally figure in the business decisions as they form the part of total cost and are internalized by the firm. This means that any amount or any cost which is incurred by the business in order to produce a particular product, that cost will be considered as private cost, and private cost will include both explicit and implicit cost. So the total of explicit and implicit cost for producing a particular product will be considered as a private cost. So all the cost of production will be considered as private cost. But on the other hand, what is social cost? Social cost is the cost of manufacturing, as well as because of manufacturing a particular product, whatever environmental damage has taken place, or we have polluted the atmosphere, we have polluted the rivers or roadways, this cost of pollution is not recognized in the manufacturing cost here. Here, at the time of calculating the private cost, we just recognize only the cost explicit and implicit, but the cost of environmental damage are not recognized here. So the cost of environmental damage is considered as an external cost. So in order to arrive at social cost will be equal to private cost plus external cost. So private cost is all the cost of production plus external cost is the cost of environmental damage. The total of this private cost and external cost will be considered as a social cost. So this is private cost and social cost. Now another concept that we have to learn is cost function. What do we mean by this cost function? Cost function is the mathematical relationship between cost of a product and the various determinants of the cost. It means that it is a functional relationship. Functional relationship of what? It is the functional relationship of cost of a product and determinants of the cost. Determinants means all those factors that affect the cost of a product. Functional relationship between these two is considered as cost function. In a cost function, the dependent variable is unit cost or total cost. That means we can either calculate unit cost or we can calculate total cost. These unit cost and total cost will be the dependent variable. And independent variable means what? Independent variables are the prices of factor, the size of output, or any other relevant phenomenon which has bearing on a cost, such as technology, level of capacity utilization, efficiency, time period under consideration. These all are independent factors, and unit cost will be considered as a dependent factor or dependent variable. Let us understand by the example here. See, total cost, if we are calculating total cost, the functional relationship between total cost is equal to F into bracket price of a product, size of output, technology, level of capacity utilization, efficiency, time period, and n number of factors that affect this cost. So any change in these all factors, these are all independent factors, any change in these factors will bring the change in total cost. So this is considered as a total cost function. Now if we calculate unit cost or per unit cost, so here per unit cost is dependent variable, there is functional relationship, and all these are independent factors. So if there is a change in the price of factor, it will bring a change in per unit cost. If there is change in the size of output, it is going to create a change in per unit cost. If there is change in technology, again it is going to create change in the per unit cost. So all these are the determinants or factors affecting the per unit cost. So all of them are independent factors, and per unit cost or total cost are dependent factors. The relationship between this total cost or per unit cost and the determinants is considered as